we are going to talk about different things related to this increase in rates and ways buyers and sellers can work together towards a mutually beneficial solution. And to talk about it with me, I have Franco Triana. Franco, can you please introduce yourself?
Yes, I'm Franco Triana. I'm a local loan officer in the St. Petersburg, Florida area with Guaranteed Rate.
This is Anastasia Bizzarri. I'm the broker of real estate with an accent.
I'm a loan officer at Guaranteed Rate. I've been a loan officer since 2001, and I'm here to go over some of the benefits and the changes in the market with interest rates and the real estate market.
As I said at the beginning of the video, we're going to talk about the elephant in the room, which is the high increase in mortgage rates from the beginning of the year to now, the consequences on sellers and buyers, and also how sellers and buyers can work together to find a win-win solution to this. So starting off, Franco, what are we looking at right now with mortgage rates?
Interest rates are hovering right around 7%, give or take. You can get a lower interest rate right now than that, but you'd have to buy the interest rate down. And FHA conventional, it's hovering around the same. Gone up from January. So if you were looking at homes before the 1st of 2022, interest rates going into January were in the threes, and now they've gone up almost to 7%. Right now into November of 2022, they're looking at rates going up one more time.
Yes, we see more inventory coming to the market, but here in St. Petersburg, for example, we're not in a buyer's market. In fact, the absorption rate the last month was around 43%. Finally, is not a buyer's market. There is more flexibility from the seller side in discussing things with the buyers so that we can come to a win-win solution. You have a product that seems to be doing just that. Can you walk us through?
This is an example of a program which is a 2-1 buy down calculator. It's called the 2-1 buy down mortgage program. What this is the first example on the top is the 2-1 buy down calculator. And so it gives us a loan amount, interest rate, 30-year loan term, and then the payment. The 6.5 interest rate is an example. And so what this goes into is that looking at properties and you have a client and a buyer, and they see a house at say $350,000 or $400,000, and they're like, I really like this house. This is kind of what we want, but we don't like the payments anymore. Because if they were to look at a $350,000 to $400,000 house 4 months ago, well, the payment is going to be big chunk difference per month on the monthly payment based off the interest rate.
So here we're looking at a payment for a $350,000 home of $2,200, give or take. How does this program work?
First, so basically the way it works is if we lock your interest rate at 6.5% interest, the first year it reduces the locked rate by 2%. So the first year in this example, it would be 4.5%. So it'd be 2% below the locked rates. And it gives you the monthly payment of $1,773. So you can see the payment difference from the $1,773 versus the $2,212. And the monthly savings difference is $438, which is the monthly subsidy. So over the course of 1 year, saves them monthly, the buyer, $5,266 just in the first year.
Basically, the rate gets reduced by 2 points in this case and by 1 point in this case. This yearly subsidy is some sort of contribution. This contribution will come from one of the parties, in this case, for example, the seller. Let me explain why this is a benefit in general and can turn into a win-win deal. Right now, if you don't have buyers and you've done everything possible, the house looks great, etc., but there are no buyers in the marketplace, the only thing one can attempt is keep on reducing the price, which doesn't necessarily bring results, because if you don't have anyone willing to buy because of the mortgage rates, maybe their target is too low for you to lower the price to their level. The seller contributes a total $8,000, and what that does, it basically reduces mortgage rate the first year 2%, the second year 1%. So for 2 years, this person is getting much more beneficial mortgage rate. Now I have another question. What if in year 3 the mortgage rates they go lower, maybe 4%?
Yeah, so they can refinance whenever they choose to. There's no penalties or, there's no prepaid penalties to do it or costs to refinance out of this. They can refinance at any point. If they don't refinance after the 2 years, the rate just goes back to the original fixed locked-in rate at the 6.5 in that example, but they can refinance at any point they want.
And I see that there's also another buy-down contribution that requires a little bit less.
Yeah, so the 1-year contribution is a much cheaper product, but it's reducing the interest rate just by 1%, which is still very good, especially depending on your budget and where you want your monthly payments to be. First year, it reduces the rate from 6.5 to 5.5, just like the 2-1 buy down. And the cost of that over 12 months is the savings, which is the $2,699. It's a much cheaper contribution from the sellers as far as cost goes.
Is this program something that is available to all mortgages or just conventional?
Yeah, it's conventional FHA and VA, which is great. This example is conventional. It's available for FHA and VA. It's a regular mortgage. It's not an ARM. There's no prepay penalties, and we actually service the loan.
Thank you so much, Franco. And we're going to continue the series with other options that buyers and sellers can have to work together towards a win-win solution.